This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY for June 27th, 2025. And with that said, let's go ahead and jump straight into it. If I sound really tired, that's because I am. I apologize. So let's try to get through this video and hopefully I won't make you all fall asleep. Okay, so this was the data on Thursday, the 26th. The jobless claims are continuing to make their way up towards the 2 million mark, which again, I mentioned that's a very, concerning thing. We had the core PC prices, and this is a revision. So the revision was upward revised, and it was upward revised past the forecast. So I did not expect that, but that was changed to 3.5%. Do I think it'll weigh on this PC report that much? I personally don't think so. I think that we still have been seeing the personal consumption expenditure pulling downward overall. So, and that's been at least the last 2 to 3 months. So, am I too worried about the whole quarter 1 PCE affecting us? No. I do think that the current PC prices have been pulling lower. We should be seeing a cooler PC data set. Now, the GDP came in kind of mixed, but the quarter over quarter came in pretty negative. And again, this was a revision from the quarter 1. So it was a negative 0.2. This time it's a negative 0.5. So that's not good for the economy. But the GDP price index quarter over quarter, the revision for that was, positive. It was a 3.8 instead of 3.7, so that's good. Sorry, I'm just trying to work this out in my head as well. The pending home sales for May looks like an increase, even though we've been seeing very cool data on that, so that's very good for the housing market. The 7-year auction yields pulled down today, so that's good for yields, are good for treasuries and good for equities. But I was expecting this to pull down slightly more, but that's fine. A 4.0 is okay. If we could, slowly get that down to a 3.5 over the next few months, that'd be great. Other than that, nothing too important was said today. Now, going over tomorrow, we have, of course, the important PCE data. That's in the pre-market 8:30 a.m. That's obviously going to be extremely important. We also have the personal spending, that again will also be very important. Let's see what the forecast is. So the forecast is expecting a slightly hotter PCE for May, but I don't think that's what's going to happen. I do believe we will see that pull in cooler, but the data will tell tomorrow. And at 10 a.m., we do have the Michigan inflation and consumer expectation data. The main data set I'm really looking for out of this one is the consumer sentiment. They are expecting that to pull upward. I don't think that's the case. I do think that we'll see that pull downward. But again, that's to be decided. And the last important data set of the day is the 11:30 a.m. and that's the Fed GDP now. That has been pulling downward, so that's very bullish for the market. That's very bearish for yields, meaning it'll pull the yields down, and that's bullish for treasuries. Let's see. So obviously the 8:30 data in the morning is going to be very key, but we also have to be aware of the 10 a.m. data. So that's 30 minutes after open. You just have to be aware of that. That can cause a shift in the buying or selling. And the 11:30 data might cause a minor shift. Very likely it won't, but we've had some kind of wonky prints with that data set over the last few months. So potentially it could come in extremely hot or something and throw the market off. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal Gex and Dex market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the technical analysis, as always, let's open up the daily chart. Let's open up our moving averages and the Bollinger Bands. All right, so sorry, I'm just trying to read this for a moment. I am pretty blind, so I just want to make sure I'm getting this right. Okay, so we had a couple cool things happen. Not just yesterday, but today as well. So pretty much we are at all-time high levels. I know the news isn't really saying that, but they're not accounting for the dividend. So with the dividend, we are very well above the previous all-time high. Now, with that said, we closed at 611.87 today. The 5 MA is currently at 604.04, meaning it's going to be pulling up very likely, probably very, very close to the 606.30 range, potentially all the way to the 607. Okay, that brings the upper bounds of the 5 MA to about 608 to 609, potentially even 6010 or 610, not 6010, 610, depending on how high the 5 MA is pulled tomorrow. So just be sure to mark that down on the open. Make sure you mark down the upper bounds and the lower bounds, which again is that $1 to $2 range above and below the actual moving average. Now, the cool thing that I'm seeing that I wanted to mention is that the 5 MA is actually pulling away from the 10 MA. Again, that's a very bullish sign. That's a very bullish indicator. And I mentioned this, I believe, on Sunday. I don't remember anymore. But once the 5 MA pulls above that 10 MA level, that is the last bearish indicator broken, essentially. Because that's one of the first bearish indicators that pull up. So currently we are in full bull cycle, full bull mode. If the all-time highs wasn't evident enough. Now, we have the upper Bollinger at 610.18. We are obviously above that level. Now, this is more of the upper Bollinger type move I have been expecting. The last upper Bollinger move wasn't very strong. The one before that was not very strong either. So this one is starting to get pretty dang strong. I still have the same thesis though, because as a trader, you have to kind of approach each trade the same way for the same levels. So in the upper Bollinger, we always usually generally start shorting on day 2. We very, very lightly started those positions yesterday just because the day was very weird. However, we really expanded on those positions today. So from here, what we are looking for is generally we're going to start seeing consolidation downward. And that consolidation is to meet the 5 MA and to test support. Now, from that support test, it can bounce right back up into the upper Bollinger, or it can go down and we can see, potentially the 10 MA tested, the 20 MA tested, and, the lower Bollinger. And obviously this isn't a single day ordeal. This would take weeks of selling, but sorry, I'm losing my train of thought. Okay, anyway, so what I'm saying is that generally day 2 we start shorting the upper Bollinger. I did discuss that very likely we would see this extend, and because of that I kind of prepared for that extension. I had some calls. I still entered some puts at this level on the second day, but I didn't go in very hard. I still had some calls open, and I was expecting that higher high. So we got the higher high, and I'm kind of treating this day 3 as, how I'd normally treat a day 2. So I set up plenty of puts. I ensure they're at least 2 weeks out. I currently have puts from June, July, August, and September going right now. And this is just kind of the range you enter puts at. Um, I know that it seems weird because, oh, we're at all-time highs. Why would you enter puts there? It's simply because it's the upper Bollinger. I don't care about the value. I don't care about anything else. I just care that my indicators tell me that upper Bollinger is being pushed. You need to short this. That's a consistent trend across the board. We've discussed this many times on this channel. So I'm, obviously going to keep doing that. It's a constant moneymaker. So with that said, I am looking for that slow consolidation to the 5 mile. It very likely won't happen tomorrow, but it will very likely start happening come next week. Again, the 5 mile is generally tested once every week. So if we don't test it tomorrow, then we will again test it next week. We tested it on Wednesday, and we went through it a little bit on Tuesday. So we've had plenty of tests on that 5 mile range. So technically, we don't need to test that 5 mile for another few sessions. So if they want to push up to potentially 613, 614, and then slowly consolidate downward, they absolutely can. And how you trade that is you just continue setting up the range. And again, that's not just saying that out of whatever you want to call it. This is a back-tested theory, or not theory. This is a back-tested trend. And you can look on your own charts. You always short the upper Bollinger. That is always where you short. So yeah, I hope everyone is starting to get some sort of bear positions here. This is the range where you short. Okay. Enough of that. Now, what is important? Okay, on the daily chart, we finally finished this major cup, and the top of that cup was 609.56, if I remember exactly. And we did overshoot it a little bit, and I did discuss this. This is a common trend with cups, is that you are going to overshoot, and that overshoot is how you build the bear structure to push downward and start building a handle. And kind of just going over, let's go over one of the smaller time frames here. But say this head and shoulders plays out here, that would start giving us the bear structure to push downward. And that's what we're looking for here, is we're looking for bear structure, and there really potentially is some good bear structure forming here. I'm going to pull up the drawings. Hopefully we don't have a bunch of stuff in the way. We got this, and I actually think this is a really key area to highlight. So potentially right here we could be building a head and shoulders, and sorry, but that's the left shoulder. That would be the head, and potentially the right shoulder into the 5 mile consolidation. So remember, the upper bounds of the 5 mile tomorrow is going to be very likely within that 608, 609 range. The 5 mile itself should very likely be around that 606. Let's do 70-ish. So yeah, that's a very strong range to start building support. If the market wants to pull down and test the 5 mile in this range, it's a very good way to do it. This is the almost ideal perfect setup for the top of a bullish cup. And we always talk about look for the bear structure at the top of the cup, and that's just what we have to continue doing. I think that's very good from here. I really don't want to be looking too far upward yet, and again, not to just keep hammering the point over the daily chart, but look at taking calls in the upper Bollinger, how that would do for you. You took calls there, they are burned, took calls there, they are burned, took calls there, they're burned, took calls there, they're... We don't know yet, how potentially they're burned. Took calls there, they're burned, 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 burned. Do you see what I'm talking about? Even though we might be in a bullish uptrend, we still have to support test. We did have a little bit of support consolidation over the last week and a half, about a week and a half ago-ish. We did get that 20 mod test, but it wasn't a very convincing test. You see how weak that candle is? It isn't a very strong test at all. So what I'm really looking for at this point is to form a head and shoulders at the top of this cup. And that will, give us the larger handle downward. And this is just an arbitrary line, so don't worry about the price. But, what's starting to get down in this area? The lower Bollinger. Um, Even though the lower Bollinger is currently at 585 right now, that would start opening up as we pull downward. So just be aware of that. We do have a lot of reasons to potentially head down. We also have the 200 MA, which can be retested as well. We also have the 50 MA. So yeah, sorry, I'm just so very tired. But yeah, from this range, I'm really not looking for too much upward room. As I tell everybody, this is the time where you take dated puts and you take short-term calls that are cheap. The reason why you want the short-term calls that are cheap is because the upside right now, currently, is not very high. Once we do support tests and start opening up the upside again, then yeah, absolutely, that's where you take calls and then you get massive moves. But for right now, that upside is topped, and I'm gonna stand by that no matter what anybody says. It's a consistent back-tested trend. So, the top is very much in right now. Whether we push up a couple dollars more or not, the downtrend will start very soon. And I do expect to test the 5 mAh. I do expect to test the 10 mAh. I do expect to test the 20 mAh. And potentially, I do expect to go down to the lower Bollinger. So we'll see how tomorrow plays out. Tomorrow has very key data, as I mentioned, and we'll see how the day goes. Yeah, sorry I'm being so blunt tonight. I'm very tired, and I've had a few people give me nasty comments, and I really shouldn't listen to them, but they've been really bothering me lately. Probably because of lack of sleep, but yeah, I just want to share. Because I don't have too many to talk to. Anyway, I hope everyone has a great trading day tomorrow. Have a great day, and I will talk to you in my video on Sunday. And again, Sunday we will go over, the whole trend for the upcoming week. So, yeah, have a good day, have a good night, and I'll talk to you in the next video. Take care.